Now, our top story, debt drama for the European Union. Greece's credit rating was cut 2 levels to B by Standard & Poor's today, sending the yields on Greek bonds soaring. Another cut would make Greece the lowest rated country in Europe. What a distinction. Now, in spite of the ratings decline, the euro did hold steady against the dollar today after weakening last week. Now, joining us to explain what comes next, perhaps, our Taking Stock think tank. My guests are Joe McAlinden, Chairman and Chief Investment Officer of Catalpa Capital. He is the former Chief Investment Officer of Morgan Stanley Investment Management. We also have Jay Pelosky. He consults on global asset allocation and strategy for J2Z Advisory. His clients include such private insurance companies as Franklin Holdings. Also with us, Mark Grant, Managing Director for Southwest Securities. He's the author of the daily newsletter Out of the Box and also the author of the new book, Out of the Box and Onto Wall Street. Let's begin with you, Mark Grant. Has Greece already effectively defaulted on its debt? I mean, doesn't the European Union realize there's no way they can pay these interest rates and function?
Well, it's even worse than that, Pimm, and I think why America hasn't focused on it yet is because they don't understand the real issue. The ECB has lent Greece 91 billion euros, about $140 billion. There's another 45 billion in debt that they hold. They can't meet the payments on the 140 billion that they owe, and now the European Union is talking about lending them more money, and it's an impossibility, in my opinion. The country has to default, restructure. Joe
McAlinden, you hear what Mark Grant says. Do you agree with him?
Well, he's to default, I think he said, or restructure.
Yeah.
And our view is that they're going to somehow figure out a restructuring with an extension of payments, with lower, more manageable interest rates.
Is that like a diplomatic way of defaulting?
It's not. It is, but it's not unlike what happened with the Latin American bonds. You know,
with the Treasury Secretary Nick Brady put together, the Brady bond situation.
Right. But the point I want to make about it, I mean, I'm not an expert on the financial issues on each of the bonds involved in Greece. What's worrying me a little bit is what happened in Finland just last month. You know, the true Finn Nationalist Party driving this point of no more bailouts for the weak countries won decisively in Finland. If last year, when we were worried about Greece, we were worried about contagion of the economic malaise. If that political contagion catches on in France, where there's signs that it might, and elsewhere in Europe, I think the euro is going to be in serious danger. Without that, I think it's going to be okay.
Jay Pelosky, let's bring you in on this. Euro in danger if indeed we get more political backlash from trying to fund Greek debt?
I think that's right, Pimm, and what that means is it's bullish for the dollar. And I think that is important for U.S. financial assets. And I think it really benefits the Treasury market, which is, no one loves it. And a strong dollar could possibly bring in foreign investors who've been waiting for the dollar to bottom before stepping in. I think it's also probably at the margin positive for U.S. equities, but a little bit of an offset there because U.S. equities have really benefited from the weak dollar in terms of their overseas operations. So stronger dollar cuts that benefit, but also probably brings in, again, some foreign investors. But to me, the big news here is that the dollar is probably bottomed against the euro. That means there's a lot of cash that's going to be looking for some new homes. The carry trade is going to be unwound. Who's going to be the winner? And I think the surprise winner could be U.S. Treasuries.
All right. Mark Grant, as Joe McAlinden was describing, the politics of the Eurozone, just as important as the economic issues. The True Finn Party, the head of the party, coming out this weekend with an editorial in the Wall Street Journal. What happens for elections in France and also the political implications for German politicians?
Well, I think, Pimm, that there's a sweeping view across Europe of becoming more nationalistic and of not funding all these other countries. I have tremendous respect for Joe McAlinden. I've been following him for years. But in this specific case, I don't think he's gone far enough in his thinking. The EU is about to release, toward the end of the month, the view of the Greek finances, and it looks like they're going to be down between $60 to $70 billion. So any extension of debt, which is a soft restructuring, is not going to make it. I mean, Greece, and I'll say it live on your show, is bankrupt, and the European Union is going to have to face up to that, as well as the other countries in Europe, and decide whether they want to fund or not.
Joe McAlinden, Greece bankrupt.
I think they're going to figure out a restructuring, but if they don't and they go bankrupt, I think we'll get a couple of bad trading days, and then things will go back to where they were, because the U.S. economy, in spite of a couple of hiccups like in the ISM data last week, is on a very strong track, and all the anecdotal evidence is pointing to a very strong summer season in the U.S. for the real economy.
Jay, you heard what Mark Grant said about Greece basically being bankrupt. How can investors use that situation to their advantage?
Well, I think that's really the question, right? What do you do with the news? I think it's pretty well understood that Greece has serious debt problems. The question is what happens when it actually does default to restructure. And I think you look at areas around Greece, places like Turkey, for example, that probably will get tarred with the same brush in the initial sell-off that Joe mentions, but it's probably a real buying opportunity because the fundamentals are very different. Similarly, in terms of debt, I think you looked at things like emerging market debt, which would, again, I think get tarred with the same brush, but have very different fundamentals. The fundamentals from the sovereign point of view in the emerging markets are the best in the world, and yet you get a 200 to 300 basis point pickup over U.S. and European rates in terms of what you can get as an investor. So there are some opportunities.
Mark Grant, you heard what Jay described, opportunities in emerging markets. What do you think about U.S. Treasuries? Are they going to be headed higher?
Well, if all these problems in Europe come to pass, for instance, one of the things that I think may happen that could throw the wrench into the air, if you will, is if they restructure in Greece and all the other financial institutions and the ECB that own Greek debt and have to take the hit, you could see the ECB itself be looked at by S&P and Moody's in terms of a downgrade. And then I think the whole scenario is different. I think the European Union right now, the European Central Bank, is at a very touchy point. And whether, as in Finland, as Joe pointed out, people want to fund or not fund is really a serious question at this point.
Joe McAlinden, this idea that the banks in Europe hold a lot of Greek and Portuguese and Irish and Spanish debt, what does that mean for those financial institutions? Are they going to go through the same crisis that U.S. financial institutions went through with the subprime mortgage mess?
I don't think so. I think that what you're going to see is that the governments and the ECB are going to work very, very hard to come up with a Brady Bond type solution that allows these banks to take moderate write-downs, but basically extend the loans, lower the interest rates, and get through the crisis with a restructuring. There will be losers. Some people who hold the wrong bonds won't come out very well. But to Jay's point, I think that it does mark probably a turning point in the dollar. And that has some implications, I think, for big stocks versus small stocks here in the U.S.
What are the implications?
Well, I think the multinationals are probably less attractive because of the currency translation effect. Small caps, primarily domestic, and mid caps, which have been doing fairly well, I think, lead the way in the next extension of this bull market. I think. I don't think this changes the direction of the U.S. equity market, which is we're in a bull market. It's maturing, but it's still heading up.
Jay, does this change the direction of commodity prices, though? If the dollar gets stronger, doesn't that mean we'll see a fall, at least nominally, in the value of commodities?
Well, I think commodities really are driven by emerging market demand. That's where the growth is. That's where the consumption is at the margin. And so that's where I think you have to look. And the tell that I'm watching, or the signal that I'm watching really closely, is copper. I think if copper really turns down and suggests that emerging market growth is turning down, then I think you'll have a fundamental repricing of the commodity segment, broadly speaking. Other than that, if emerging market growth holds up, then I think commodities probably range trade around here. I just think there's a lot of money, a lot of trades that have been set up on this one-way, weak dollar kind of trade, U.S. equity trade, and I think that stuff is going to come unwound, and where does that money go is what I'm trying to focus my attention on.
Time for one last question with you, Mark Grant. So what is the next event in Europe that you're looking at?
Well, over the weekend, Pimm, it wasn't just Greece. We saw one of the Irish ministers report that Ireland was going to have to restructure, in his opinion. So this could be a systemic problem for the European Union, the European Central Bank, and you have to then see if people want to fund or not. But the size of all this, because of the size of the holdings and the European Central Bank loans on top of the loan made by the European Union and the IMF is a significant number. It's not insignificant.
We've got to leave it there. Mark Grant, Southwest Securities, Joe McAlinden, Catalpa Capital, and Jay Pelosky, J2Z Securities. Still ahead.